When we talk about music, what's the first thing that comes to your mind? Your favorite song? Favorite singer? Well, to some of us, it's Saregama show. Our entire family used to watch the show. Good memories, right? Hello everyone, I'm Rakshith Pai and today I'll talk about a company that gave us so many memories, especially to all the music lovers. Yep, I'm talking about Saregama India Limited. Is it worth investing? Saregama India Limited is one of the major recording and publishing firms in India. It was founded in 1901 as a branch of the Electrical and Musical Industries Limited in London, before being acquired by the Kolkata-based RP Sanjay Goenka Group. The firm has achieved significant milestone in the history of Indian music recording and publishing. Saregama Limited collection includes classical musics, old Hindi cinema soundtracks purchased from reputable film houses. Saregama is also active in the television serial segments, particularly in South India. The company also produces a preloaded music player by the brand name Caravan. Financially speaking, the company has seen some healthy growth in its licensing and advertising revenue. Digital growth is really important. Saregama Limited provides a double-digit operating margin at over 29%. Earnings are mainly supported by its high-margin licensing business, reduction in advertisement expenses and low debt level. Saregama Limited is also planning to acquire new music contents right across various languages. The company is earning well, especially during the last 2 years. The margins are also picking up, debt level is low, and it has one of the largest music portfolios to monetize on. With that said, the valuation still feels a bit high for the business prospects. Technically speaking, the stock is clearly in a strong bearish trend. The stock can show a reversal of the trend anywhere by 4100 to 4400 range. Any sooner might be a false signal. Anyways, based on the valuation and lack of volume, I would stay away from the stock for a few more trading sessions. Opportunity and strength. Number 1. Saregama Limited has concentrated on its high margin businesses and was able to make a turnaround in the business. Their licensing business has given a CAGR of 20% for the past 5 years. Number 2, the company has low debt and its ability to service its interest expenses is increasing. The liability position is also strong and shows signs of more improvements. Number 3, strong promoter backing. RPSG Group is well known and one of the most respected companies. They hold over 59% of Saregama Limited. Weakness and threat. As said earlier, the company did nothing for literally 15 odd years. They lost the market share and all they now have is good collection of old Hindi songs, which by the way I can get access to over the internet anyways. Number 2, the music industry is highly competitive one. There are giants looming around and Saregama Limited has no visible moat, no advantage over its peers. There is a term called first comer advantage, which means that those who come sooner to the business get all the benefits. Although Saregama entered the business over a century ago, they had a couple of years doing nothing. They weren't competitive. They entered the film music business just recently in the year 2016. By the time T-Series has grown to be a giant in the industry. Look, the biggest drawback to any business is that they become relaxed. Nokia did it, Kodak did it, and so does Saregama Limited. It's not all bad though. Companies trying something new. Since 2016, they started investing in music and launched Caravan, started its own film production house in 2017, and just recently in the 2020, they started investing in non-film music too. Let's hope they succeed in all their endeavors. With that said, I'm not investing in the company, I don't have them on my watch list, and I give 6 out of 10 ratings. That's it for today. Thank you for watching.